Welcome to Al Stocks. In this video, we're going to be calculating the intrinsic value of the SoFi stock. I got a lot of requests from this video, and here it is. Let's get straight to business. SoFi became publicly traded on June 1st of 2021. However, we do have numbers of their financials before they went public, but to accurately evaluate a company, you want to use financials of when they went in the equity market, aka the stock market, because that's when you see the most growth. That's when they got an injection of cash so their business model can grow even further. There has been circulating online forums that a certain lockup period is going to expire, so I am going to give you a secondary price target that also takes into account the financials of the company even before it went public, literally a holistic intrinsic value. Looking at the financials, a lot of analysts agree that this year, the total revenue of SoFi will be 1.01 billion, and that's the number I'm going to be using. Furthermore, in my intrinsic value calculator, the number of shares outstanding is going to be 806.92. The problem in evaluating a new company that recently went public is that there's not a lot of data. Now, the only quantitative measures that I have on SoFi is the original investor of the blank check company IPOE from Social Capital, the CEO Chamath. As you can see, he notes that the adjusted net revenues is around 43%. So that's the number I'm going to be using in my short-term calculator because I believe other financial analysts are also using that number as well. Because what else do we have to analyze this company? So recently on November 18, I'm sure by now a lot of investors know about this, Chamath decided to sell 15% of his SoFi stake and reintegrate it within Clover Health in its recent public share offering. A lot of investors have been asking what is the intrinsic value of the stock, and I'm going to show you based off of the fundamentals. Now, do you remember when I talked to you about the secondary price target I'm going to allocate? So as we discussed, SoFi became a publicly traded company after 2021. So any numbers before this are going to be weak numbers. As you can see, the revenues here are not that impressive. However, what else do we have to look at a possible bottom if the stock does experience a bearish moment? In fact, as you can see, 2018 wasn't really a good year for SoFi. Their total revenues was only $269.4 million. It actually dropped almost by half. Regardless of that matter, I'm going to be estimating the free cash flow by taking the revenues here and multiplying it by 5% to estimate the positive free cash flow of the company. The first price target will only allocate numbers from 2021, and the second price target will take a holistic perspective even before the company went public. Now, some people might say, well, why are you multiplying 5%, some arbitrary number? My response is go to any publicly traded company that is free cash flow positive, multiply the revenue by 5%, and you'll see that the estimated free cash flow hovers around this region. This is my intrinsic value calculator. If you would like access to this, there's going to be a link in the description box below and in the pinned comment sections. I'm currently offering 87% off my Mastering the Stock Market course, Early Beta Access, a lifetime membership one-time fee. You'll have unlimited 24/7 access to this intrinsic value calculator and book value calculator. Now let's get started. Like I stated earlier on, I'm going to be doing two different types of intrinsic value calculation. One is going to be after the company went public, and one is going to be a holistic before and after the company went public. Just like I stated prior in the video, we're going to be taking the estimated analyst expectation of how much SoFi is going to make, which is going to be $1.01 billion, and taking 5%, which will estimate the free cash flow for the future. So you take this and you multiply it and you get 50.5. It does not matter which year you place it in, it just takes the average. So we're just going to plop it down here. And by utilizing that, we're going to take that 43% that we got from Chamath from his quantitative analysis. And once you integrate that, the numbers update and we go 10 years into the future and discount back at a 10% discount rate, utilizing a 2% perpetuity model. But we're going to change that to a 4% perpetuity model because of the CPI data. On top of that, we're going to divide by the number of outstanding shares, which is 806.92. to get you an intrinsic value of $18.42. Now, if you go to the SoFi stock, it's quite interesting because that's exactly what's hovering at right now. $18.39. In fact, as soon as Chamath sold 15% of his stake, that's where it went down towards, around the $18 region, which is only a couple of cents, not even 10 cents off from our intrinsic value calculation. You can see how powerful these calculations are to assist you with your investment thesis. Now I'm going to show you the intrinsic value holistically. Now, all we have to do is put the estimated free cash flow that we got from calculating it from the revenue. And those numbers are 25.335 13.4, 28.275, 50.5. And then we're going to be using a 43% growth, which is what we got from Chamath. And by doing that, we're going to use a 4% perpetuity model. We're going to go 10 years into the future and discount back at a 10% discount rate. And you can see the intrinsic value of the stock now is $10.19. In fact, if you go ahead and drop the perpetuity model and let's say inflation subsides, you get an intrinsic value of around $8. And I've heard from a lot of forums that a lot of the original investors purchased this stock from around the $8 region. And as you can see, if you look at the company as a whole, based off of its progress report, it's hovering around $8 to $10 in terms of its stock price. However, that's using numbers prior to it being public, which is not fair because it didn't have all that capital to integrate within its business model. Regardless, if there was a recession or something happened within the stock market that was detrimental, understand that this stock will drop around the $8 to $10 region. That's kind of I would say, the low bottom effect that we would see. And from my 10 years of experience utilizing these types of intrinsic value calculations, stocks tend to go down next to their book value when there's an economic catastrophe. Just like the coronavirus March 2020 crash that we've seen literally in front of our eyes. And it was just an amazing, juicy opportunity. Now that we went over my intrinsic value calculations, I wanted to talk to you about some bullish thoughts that are going through my mind. The first one is that a lot of student loans are currently at a 0% interest rate. Once these payments start back up again, a lot of people are going to start refinancing. SoFi is going to benefit with the slew of refinances that are going to happen with the geared millennial moat that SoFi has within this population. Furthermore, once Federal Chairman Jerome Powell raises interest rates, that is directly going to benefit banking stocks, especially SoFi. I'm honestly expecting a rate raise in 2022, but Federal Chairman Jerome Powell wants to do it in 2023. He also said he doesn't want to start tapering until 2022, but they started doing it literally last month. So I think we're going to see a rate hike, and that's going to directly benefit SoFi. Now, if you made it this far, consider liking, subscribing, and turning on all notifications. It is my highest, truest honor to provide you with this information. Thank you, and until next time, God bless you.